Well, welcome to the ETF panel. I've been looking forward to this panel all day. I am here with two wonderful, wonderful humans. Steve McClurg, who is the founder of Canary Capital. You guys might know him from his avalanche of individual ETF applications with the SEC. He's got about 10 to 15 in there right now, I think.
I think like 50.
Yeah, I've lost track, to be perfectly honest. And then we've got Matt Hougan from Bitwise. And the cool thing about these two guys is that they actually have XRP ETF filings in with the SEC. And I don't know if you remember this, but about a year ago, after the Bitcoin spot ETFs were approved, Steve went on Bloomberg and they asked him, what other assets could be approved by the SEC, in the near term? Where do you think we're going with this? Is it Ethereum? Is it something else? And Steve said, I think it's going to be XRP. I think XRP is going to be it. So that was a bit of a viral clip, if you remember that word.
Yeah.
So I want to start there. So you guys have filed. There's some deadlines coming up. I don't think the XRP deadline is for a little bit, but how are those talks going? How are those filings going? Are you confident that an XRP ETF will be approved at least this year?
I mean, I personally am fairly confident.
Yeah.
Anything could happen, as we've seen before with all the Bitcoin applications in the past. But look, I think the current administration and the current SEC is very crypto friendly. There's going to be very few exceptions that I think that they'll make on what doesn't get approved. At the same time, one of the issues has always been, well, is XRP a security? Well, the courts have determined that it's not a security. So that's a hard argument to make. Mm-hmm. And I think the current administration is definitely on board with that. So I do believe that we'll see an XRP ETF this year.
Mm-hmm. Matt,
Love it.
You are interested in index funds.
Yeah.
So talk to me a little bit about that. We have a deadline on that coming up in July, I believe, and you guys have an index fund application in that I think has 5% XRP exposure.
That's right.
So what does that mean for XRP holders?
Yeah, first, I'm with Steve on I think it's likely that we'll get an XRP ETF this year. Those deadlines are in October, and that's an exciting time to be focused on. There's some interim deadlines, but October's the real one.
What are interim deadlines? Can you just explain that a little bit? Because I know there's some confusion.
It's like when your teacher tells your daughter to write a paper and show a draft and then a second draft, and she never does it until the last minute when she writes it overnight.
So everything that I did in high school.
That's the way it works with the SEC. They have 240 days to review an ETF, but there are these deadlines at, I think it's 90, 120, 180, and they can just push it forward by literally writing a memo, say I'm going to push it forward, and my experience is they tend to do that. Yeah. So when we talk about interim deadlines, you'll see news stories that an XRP ETF was delayed. That's actually incorrect. That's the SEC just pushing the homework button and booting it to the end. And the end is in October. So those are the deadlines to look at. Mm-hmm. The reason I bring that up is relevant is we have an index-based ETF that we're hoping to uplist. It's an existing fund that we would uplist. Its approval deadline's in July. As you mentioned, that ETF has about 5% XRP. It's a market cap weighted ETF. XRP is the third largest holding. We're very excited and energized by that. And I'm excited about that because I think that is maybe the biggest market in ETFs. If you think about ETFs broadly, most ETFs are index-based. Mm-hmm. I think an index-based ETF could be as large as a Bitcoin ETF. And that trickles down into significant purchasing of XRP if and when it happens, and we get the inflows.
Mm-hmm. So you expect to see more index funds as opposed to single asset ETFs?
Yeah, so I think people love both. Some people want to make a bet on single asset like XRP, and then we serve a lot of financial institutions and family offices and advisors, and often they just want to make a bet on the best projects in crypto. They want to own Bitcoin, they want to own ETH, they want to own XRP, sort of like what Brad was talking about. It's really a rising tide lifts all boats. And so I think, look, if you're thinking of this asset and you want institutions to buy it, you want both of these things. You want the XRP ETF for people who want to make specific bets, and then you want the trillions of dollars making a broad-based bet on crypto, some of which flows into XRP as well. And I think you're going to get both of those this year. Mm-hmm.
I think that's.
But by the way, I'm a big fan of that particular product. I personally own some. I own a lot of it in my fund. And I just, not investment advice, but anytime that this thing trades at a big discount, so it's discount to NAV, you're buying it for 11% cheaper than it is. So I'm actually really rooting for these guys, hoping that this thing gets approved in July, because that means that 11% discount narrows and it's an instant, almost a 11% clip. So it's a big deal.
And how big is institutional interest in XRP specifically, Matt? Do you talk about it at all?
I think there are two ways to answer that. So I think institutions are just now learning about crypto.
Right.
And as they learn about crypto, they come in through Bitcoin, and then they learn about other assets. And we're still relatively early in that stage. So my honest answer is they're just at the learning phase. And it takes these people a long time to learn. A scary fact for my business that will make Steve choke is that our average client meets with us 8 times before they buy our products, which is an incredible fact. So they're at that learning phase. But there is broad-based significant demand for crypto exposure, including XRP. And so I think that's where the first leg of this, many hundreds of billions of dollars of institutional money is going to come in.
Mm-hmm. Institutional on your side of the arena, I feel like you're a little bit more focused on, providing the lesser known ETF product names in ETFs, to institutions. But some of these institutions, have they ever even heard of staked Tron, or something that you applied for earlier this week, I think was, remind me what it was? It was literally finally like 2 days ago. Protos, there we go.
Yeah, so Kronos is the token that fuels Crypto.com.
Crypto.com, right.
So kind of like BNB fuels Binance.
Yeah.
So yeah, I mean, look, what we're seeing, frankly, what we're seeing is a lot more retail support for a lot of these. And you have to keep in mind, when the Bitcoin ETFs were first filed, well, they were first filed by the Winklevoss twins way back, but there was kind of like this second wave of filings that happened. And when that began to happen, a lot of institutions began doing their work. And when an insurance company or pension fund, which is kind of like the ultimate goal that you want to get to, or sovereign credit fund, that's where most of the money is, in those 3 areas. It's like, over 65% of global wealth is there. And you want to get there. And their time frame is very, very, very long. I used to manage money for all 3 of those types. And, without a 5-year track record in some cases, they're not going to invest. So it's just going to take longer, and they're going to have a longer due diligence process. Now, if you're looking at financial advisors and wirehouses, theirs is going to be a little bit shorter, but it's still 2 to 3 years. So I think once the time that some of these ETFs are filed, that's when they begin the process. So I would anticipate a 2 to 3 year process before you start seeing that kind of movement. But initially, I do think it's going to be very, very heavy retail. And if you think about the retail investor, a lot of people hold money at Fidelity or Schwab or some other platform, or with their financial advisor, and they don't want to have multiple platforms that they're trading in. If they open an account on one of the big exchanges, they're not going to just move all of their Schwab money over. They're going to just slowly drip in. But if you have an ETF that's available on the platform, where they're already trading stocks or already investing, then it really opens up that audience a lot more. And that's one of the things that we've seen with the latest Bitcoin ETF.
Mm-hmm. It's an interesting sort of relationship, I feel, between retail investors who invest in ETFs, because retail investors are usually, especially crypto savvy ones, they are the ones who tend to trade on exchanges and have the self-custodial wallets. So more interest. I mean, where does the retail investor fit into the ETF picture? Are these younger investors? Are these older investors that are sort of more cautious? Like, what are you seeing there in terms of trends of, like, maybe age, maybe?
I think it's everybody.
Is it everybody?
I mean, it's even like, we meet people who are CEOs of crypto companies that own our ETF. So why do they do that? They do that because they have money in retirement accounts, and they can't use that money on exchange to hold crypto. So we actually get significant inflows from crypto native people who happen to have an IRA, a retirement account that wants exposure. I do think it's maybe older generations that weren't native to the Coinbase and Kraken boom, but want exposure to this space and feel more comfort. But it's sort of everyone, and it's a big deal. It's still the majority of money in the Bitcoin ETF is retail. Yeah. That's shifting over time, but it's a big deal.
Interesting. And a lot of wealth advisors coming in now. I believe there's a stat from Bitwise, it was something about 190 wealth advisors in the first quarter of this year
Yeah,
have come into your products. I mean, that's huge.
The numbers are going up and up and up. And ETFs are really cool. I mean, I love to share this fact. The Abu Dhabi Sovereign Wealth Fund owns a Bitcoin ETF, and so does my dad. There are very few investment products where my dad and a sovereign wealth fund buy the exact same thing at the exact same price. That's the beauty of ETFs. They do deliver that, and they'll deliver that for XRP as well.
Mm-hmm. Yeah. Let's talk a little bit macro here. So I've got one very bearish person, and I've got one very bullish person, and I want them to both describe to you their cases for why they are the way they are. So let's start with the good news. So Matt, you're like a permabull basically on all things Bitcoin and all things crypto, it seems. So how are you feeling right now? How's your bull case?
I'm extraordinarily bullish. I spend my days traveling to traditional financial conferences. And 2 years ago, I used to speak pre-conference, and then a year ago, I used to speak on a secondary stage. And I've keynoted 3 major broker-dealer conferences over the last 2 months. These people control 30, 40, 50 trillion dollars, depending on how you count. When I survey the room, I ask people to raise their hands. How many own crypto in a client account? And you get like 3 hands. And then how many are considering buying it in the next year? And you get like 70% of the room. Mm-hmm. So I think we're just, every week, we're unlocking another $5 to $10 trillion that couldn't buy crypto. Last week, the Department of Labor changed their rules so 401ks could start allocating to crypto. That's another $8 trillion unlock. Steve will say that's not going to happen overnight. He's absolutely right. That will take multiple years. But the week before that, a major wirehouse that has $7 trillion unlocked crypto ETFs. It's just too much money. You know, I say this all the time, like 95% of the world's wealth has 0% in crypto. That's going to change. So that's why I guess I'm a permabull until that plays out.
Well, you have to keep in mind, my background. I was a former institutional bond manager, and we're just negative by nature. So
this is true.
And in my and really our main business at Canary is we are a hedge fund platform, and we're the reason why I love managing hedge funds and I think what makes us good at it is that we're constantly looking for all the risk in the market and trying to determine all the things that could go wrong, how to potentially mitigate that risk, and always taking that side of things and then hoping we're wrong, basically. So what I'm seeing right now in the economy actually isn't that great. So not only do you have a 4-year crypto cycle that historically should be coming to an end this year, and if you go back in time, the last peak of the cycle was October of 21 when we launched the Bitcoin futures ETF, and it was top of the market. And you knew it was happening, right? I think the slew of ETFs coming potentially in October could be the top of the market. But we are coming upon the end of that 4-year cycle, which I'm always looking at from a crypto perspective. But also, I do think we're coming close to the end of the bull run that we've had since the Great Financial Crisis. And some of the things that I'm looking at as far as data goes is consumer credit card debt delinquencies are as high as they were in 2009. Auto debt delinquencies are as high as they are in 2009. Student debt delinquencies just spiked up to about 2007 levels, which isn't quite at the top yet. The only thing that hasn't spiked is home equity line of credit, which were extremely high right before the financial crisis. But I feel like the underwriting principles have been much better, which is why we haven't seen that rise. The other things that I'm looking at on the consumer sentiment side is hotel bookings, airline bookings, cruise bookings, restaurant bookings, bar bookings. They're all financial crisis level right now. So we've seen a massive decline in bookings. And what's driving the economy at the moment is really only 10% of Americans can really afford to pay their mortgage, pay for groceries, and have extra money to invest. The other 90% are struggling because inflation has so high in the last 4 years. Government spending was high over the last 4 years that drove inflation. And now we're at a point where people just can't afford to do things. So it's really 10% of the economy is driving retail investments. Now, granted, there are, as Matt mentioned, there are some positives because you still have institutional money that's still being put to work, but you have that vast amount of retail money that's not going into the markets, whether it's equities or crypto. Now, on the equity side of things, that is where I see that's where I had the most dismal view. If tariffs go into effect, it'll be a drag on equities. It won't be a drag on crypto, though. So I'm actually seeing a shift of people from equities into crypto because you don't have the tariff drag. And you also have monetary policy globally that's causing M2 global monetary supply to go up. And that's usually something that I look at when I'm looking at the price of crypto, the price of gold, the price of other hard assets. So there are some positives in there that should help crypto out, relative to equities or even bonds, which I think, bond yields are going to go higher and bond prices come down. But generally, I'm bearish on the economy, the future of the economy. I'm bearish in 2026, and we'll see when the all-time highs were. They could have been last Thursday. They could be September, October. I just don't know, but I'm watching it very closely.
All right, on to more positive things. We saw some guidance, and my days are so off to be perfectly honest. It was either yesterday or the day before from the SEC on certain types of proof of stake, which I think has been a big watch for people in the industry. Staking is a key part of, frankly, decentralization, part of cryptocurrency, a native part that Gary Gensler thought and said was probably a security. But now we've got some guidance that may be an unlock for ETF issuers who want to offer staking within their, say, Ethereum ETFs. What was your reaction to that guidance, Matt? Because you guys have an Ethereum ETF. You guys don't, Steve.
That's right.
I mean, you can describe what's happening in the regulatory framework as like a return to sanity. So our reaction to that was like, yes, the return to sanity has continued. We've been running staking ETFs in Europe for years, and all they do is increase the returns to investors. It's sad to have a regulator who protects investors by stealing returns from them. That doesn't make sense to me. So our reaction was positive, and I think we'll get in-kind ETFs. I think we'll get staking in ETFs. I think the SEC is acting rationally. That's part of why I think Steve and I are both optimistic we'll get ETFs beyond Bitcoin and ETH. Because what have ETFs done? They have lowered cost and raised security for investors around the world. Who doesn't want that? Yeah. So I think all of this is just the SEC coming to a rational point of view, and that we were happy to see it, but honestly, we weren't surprised.
Mm-hmm. Yeah. I mean, even on the staking topic, you made a really good point on raising security. I personally own things on a ledger, and I personally try to stake what I have, and all I can think about is messing up. I've got really, really smart people on my team that aren't me that do this for us, and I just want somebody else to do it, right? I'm 50 years old. I could barely program a VCR, let alone do some of this tech stuff. So it's great to have experts do that activity for you and not, try to rely on people that aren't. Matt's way smarter than me, probably does it all himself. But I like the fact that we're working with qualified custodians like BitGo and Coinbase and Gemini and Crypto.com that are experts at this and can handle this type of activity. Also on the staking front, I'm a big believer in staking. Obviously everything that we filed for is all for staking.
I think that's why you didn't file for an ETH ETF, right?
That's exactly why we didn't file for ETH ETF.
Yeah, because there's no point if there's no staking.
No staking.
Yeah.
Let Matt fight that battle.
I still think there's a point, but I would love to get staking.
Yeah. Why has there been such a pushback against staking when we've seen success in Europe and we've seen success in Asia on those fronts that it's just so normalized? Is it just another iteration of politicization? Can I speak? Politicization of the crypto and the financial system.
So the charitable description is the SEC took a crawl, walk, run approach to crypto. They allowed futures-based funds and then spot-based funds, and they were going to get to staking. The sort of darker interpretation was they were trying to fragilize the crypto industry by causing everything to exist sort of offshore and unregulated formats, and they did a good job. I'll leave it to the room to decide whether they want to give them the benefit of the doubt or the other approach.
And not these guys, I don't think. They're a little jaded.
John Deegan's here today. I'm sure he has a lot to say about it.
I would have a lot to say about it. We're out of time. I do just want to ask you guys, next 6 months to a year, what are you most excited about in the ETF space? Steve.
Yeah, I mean, I actually probably am most excited about the staking feature. I mean, you brought up a really good point, and I'm so glad that you're able to get that. It gives a layer of complexity. I used to manage ETFs a long time in the past in the TradFi world, and one of the best features was when you're running an ETF that has either fixed income or equities that have a dividend. It's just a great enhancement to a vehicle like that. So if you're able to deliver a yield on top of the actual token, I think it's going to bring a lot more people to the market. So that's probably number one, and number two, I'm really excited that we've moved beyond just Bitcoin and ETH, which we got last year, and getting more choices for people. I'm a libertarian. I want you to have choices. There might be some things out there that I don't agree with, but it's not my right to tell you that you can't do it. So and that's and that's how you invest as well. It's like you should be able to invest in the things that you want to invest in a safe vehicle, and I'm glad that we're getting to that point.
Yeah. Look, I think we're in the golden age of real-world crypto. I actually don't think the 4-year cycle is relevant anymore, so I'm against
interesting.
Steve on that. And I look at crypto and I look at an industry where people have been asking where the real world impact is. And you look over the last 4 years and regulation just made that impossible. It scared entrepreneurs out of the space and it suppressed product development. But the thing people don't realize is during those 4 years, the infrastructure continued to build, and it built at an exponential scale. And so now you have infrastructure that can really support worldwide financial activity. And all of a sudden, the dam has been unleashed. I think we're going to see real-world impacts at a much faster rate than anyone in the broad-based media expects, because it's been suppressed so long. It's a coiled spring. And so I'm really excited to see that come into the world, make the world a better place.
Awesome. Give it up for Steve and Matt. Thanks, guys.
Thank you.
Guys, we're going to take a small break and we will be back at 2 o'clock, okay?